Hello and welcome to your Daily Five. I'm Jane Gallina, also known as Airplane Jane. I'm out there on social media helping people every day. You can find me on Twitter, it's Airplane Jane, Instagram, YouTube, LinkedIn, my website, cjanetrade.com, and also on Telegram. If you ever have any questions, please feel free to reach out to me. I am happy to help. I have been a day trader now since 2015 and follow the dark pool. So let's see what I'm looking at. First up is going to be the Russell 2000. Now, the Russell 2000 will give us a view of where the market might be heading. This does have over 2,000 stocks in the ETF of the Russell 2000 index. And as we start to see, this is the daily chart. You can see the green line right here is the 50 simple moving average. The blue line, aqua, is going to be the 4 EMA, and the yellow one, the 8 EMA. So we have started to roll down the hill since July. We did have major dark pool prints while we are up at the top. And no surprise, now that we are down below them, we are starting to see a bit more of a correction. Let's move forward with the weekly. You can see this has been a pattern pretty much since the beginning of February. We have gone sideways, not really moving up or moving down for the sector, which is quite surprising as we have seen all-time highs for the S&P 500, as well as QQQ and Dow Jones Industrial Average. So when we look at this basket of the smaller cap stocks, even though the Fed started out buying 50 billion a month back in June of 2020, increased it to 60 billion a month, November of 2020, and then in April jumped to 80 billion plus 40 billion of mortgage-backed securities, this has gone sideways since February, which is very much a red flag for me for the market. And if we do drop below the 212 level, I think we're very quickly going to see 204. And even more enlightening is the monthly chart. You can see that we had a couple doji months, and then all of a sudden we are starting to turn downwards. Now, when we look back in history, every time that we have had this downward turn, we did have a bit more of a correction. Right now, that 50 simple moving average is very far away. Back here last February, March, it wasn't that far from the top. Now we're looking at roughly a 50-point correction down potentially to 160. If we do the measured move of an ascending wedge here, we could be seeing it back down at $99. So to me, this is giving me the signal, hey, potentially put on protection for longer term portfolios. The market's a little iffy right now. We do have a lot of socioeconomic, political things that are happening, and the market tends to react ahead of time. We've heard that potentially the Fed is going to talk about tapering. The market does tend to react ahead of that. These are the equivolume charts from StockCharts. And if you look at it, we had higher volume at the top last month. We are below that higher volume. Until we can break back above that 8 EMA at roughly 220, I am going to be bearish on the Russell and also bearish on the market. Not going full on in as a bear, but starting to tiptoe into shorter positions. Next one up is going to be Disney, right? Disney had earnings, it jumped up really high, and look at this big volume candlestick just last week. Well, big volume, and we're below it. Hitting highs, likely trimming at the top. And again, this weekly chart is going to show us a bit more of that bigger picture. If we break below roughly 172.50, we're likely going down to 170, 167.50. If we break below there, watch out. We could be heading back down to 160 and then potentially 155. So keep that on watch, because Disney is also sometimes a leader as to where the market is going to go. Last week, we had that big volume. We had a doji on the weekly, a bit of selling pressure coming in here. And then 4 weeks ago as well, more selling pressure. We have not been able to hold really above this 180 price threshold for Disney. So that's raising more red flags for me. And actually, if I put this onto a monthly, we probably would have seen a shoulder right over here in January, a head formation, and another shoulder. So we have a potential head and shoulders with a high roughly up at 195 down to 170. We might see a 25-point correction on Disney alone, which would bring us roughly, down to that 150 mark. In track with all of these shortages with shipments, everything is happening. They're shutting down ports in China, fuel shortages for airlines. Did you know that the airlines do a lot of the transport around the US? Well, if those airlines and flights get canceled, that means that the transport of the items like mail, also smaller goods that other people use for contracts to ship on the airlines, how they also make their money, gets stalled. Well, Toyota, GM, a lot of these car makers are seeing that there's shortages of chips, and that is hindering their new car sales. Used car sales, well, they've already been produced. They can create a little bit of income off of these cars that are coming off of leases, but really that new car sale is not happening as quickly because they don't have the chips to create these cars. So Toyota is another one that I'm looking at for this potential move to the downside. You can see a bit of an M formation happening on the chart right here. Let's turn on my laser pointer. So we do have a bit of a bottom right here, 172.50, back up to 185, 172.50, 185, and back down. If we do break below that 172.50, I would look for a 12.5 move back down to roughly I'd look at actually 165 as a stop right there with this big window of opportunity that is here on the chart with the gap. Again, if we look at it on the weekly chart, you can see that we have slowed down that volume. We had big volume back in June, and now it's somewhat slowed down. So keeping this on watch as well for a potential short to the downside and filling that gap down. Next up is going to be Intel, one of the chip makers. I do like this because we do seem to have created a bit of a bottom right here. It does look like a descending wedge. The descending wedges do tend to fail about 65% of the time and surge to the upside. So this is the daily chart. When we look at it, it has been rejecting that 50 simple moving average over time. That's up at roughly $55 right now. I would look for this to reclaim the $53.50, $54 mark with higher volume. We did have high volume yesterday and buying wick at the bottom. So if we can break back up above, this does have that potential to move up higher. It's also actually hitting a 161 EMA. You can't see it right now. It's not on the chart, but it is hitting a 161 EMA, which does tend to be a support level. So I would look for a support of $52 if I were to get into this long right now. But like I said, I would look for it to break up above $54 first. Next up is going to be a crypto. I do like this one to the long side, longer term holding. I am in this as of 5.5 cents personally, so very happy with the progress. And this is going to be XDC, XinFin network. Now you might say, Jane, why are you throwing in a crypto? You know, crypto is going to be the wave of the future with the new banking system. People there, I was just looking at Bitcoin and how, you know, some people had paid 10,000 Bitcoin for a pizza in 2009. Well, it would take a lot of XinFin right now or XDC to pay for a pizza. However, this is likely going to be one that will be used in the financial derivatives market as we move forward for those transactions. So I do like this. We are breaking out right now at 15 cents. The former high was over here at 13 cents. We did break out. My target with the breakout above 13 cents is going to be up to 21 cents. So another 6 cents, and that's going to be roughly 30%, right? Or yeah, 40%, excuse me. So looking at this to continue to move to the upside, but the real reason why is the use function, right? We do have the ISO 2022 banking regulations that will be going into place November of 2021 for adoption. And XinFin is one of the ones that has been set up to help with the banking systems, with the SWIFT systems, with derivative systems, derivative trading, all of that. So looking at it, this is the reason as a trader, I'm really excited about this. There's great value potential and growth with this crypto based on the use function. All this information is right from the XinFin.org website, except for this. This does come from CoinMarketCap, and I've added on Bitrue. Bitrue is another one that's personally where I have my XinFin or XDC. And as you can see, we have the first generation of the crypto coins. We have Bitcoin came out. It was 3 to 6 transactions per second, fee of $15, and transaction confirmation up to 60 minutes. Could you imagine buying a pizza and you wait 60 minutes for the transaction to go through? Thank you. It's cold now. Then we have Ethereum, right? Definitely faster, 10 to 20 seconds, still fairly expensive per transaction at $10, and a better transaction rate of 12 to 16 per second. Then we move forward. This is the new wave. We have XinFin that has 2,000 transactions per second. Fee is amazing, $0.00001 or 1 cent per transaction, and 2 seconds with finality. So looking at that, this is a very green alternative for this new banking system that we're going forward with, and great use potential for the value to grow in this crypto. If you guys want to learn more about trading around the dark pools, please come out and check out the training pit at thedarkpools.com or bit.ly/training pit. And thank you for watching Your Daily 5. Again, I am Jane Gallina. If you ever have any questions, feel free to email me at jane@cjanetrade.com. And as I always like to say, carpe profit, seize those profits one trade at a time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.